SME is a small and mid-sized enterprises that have revenues, assets, or a number of employees below a certain threshold. Each country has its own definition of SME. There are three types of SME, namely medium-sized business, small business, and micro-business. And the main sectors in SMEs are services, manufacturing, constructions, agriculture, mining, and quarrying. For manufacturing sector, SME is defined as sales turnover not exceeding 50 million ringgit or number of full-time employees not exceeding 200. Meanwhile, for services and other sectors, SME is defined as sales turnover not exceeding 20 million ringgit or number of full-time employees not exceeding 75.
Transaction cost is the sunk cost that result from the economic change in the market. There are three types of transaction cost, which is search and information cost, bargaining cost, and policing and enforcement cost. The search and information cost will be related to looking for more information about agents with whom the transaction will take place, like stock exchange, as it is included between buyers and seller of the financial together. The bargaining cost is about the agreement between both parties that is included in the contract, which could be very high cost and very low cost. But policing and enforcement existed to make sure the parties within the contract follow the agreement in the contract. As the transaction costs are important to investors as they are one of the key determinants of the net returns in the future. Transaction costs, however, will diminish returns, and over time, high transaction costs can mean a lot of money will lost from not only the cost, as it could also reduce the investment that could be done to one. Difficulty in accessing finance. Most SMEs thus have difficulty in accessing finance. There is a gap that is called asymmetric information problem, that is between demanders and supplies within the market. That could happen if one parties have more information that the other parties lack. Many big enterprises have connection to the capital market, which gives them benefit to list their share on security market or issuing securities in the bond market. However, most SMEs does not have the connection that will make it harder for them. Although the financial institution can observe the capital market, it is more high risk to do so to the borrower of small loans. This lack of information will make the SMEs have limited track record in raising investment and provide suitable returns to their investors. SMEs often have few tangible assets to offer as security. As a result, the investors are afraid to invest in them as they are afraid of the returns that they will receive in the
Next is lack of collateral. This problem has been highlighted as the main obstacle faced by SME in Malaysia because they often not have valuable enough asset to collateral, and that's why it's become major challenging. Collateral refer to a security or guarantee for the lenders in a form of an asset or property. The SME is implementing the insufficient of collateral, and its operation is considered to be at high risk, and then being the reason why some financial institutions refuse to fund. The failure of SME to meet the bank's collateral requirement could be due to the fact they do not have any asset they can put forward as collateral. For example, some of application has been rejected for the purchase of ICT machine and equipment rather than the research and development, which is R&D. Last point of this part is SME have insufficient use of information technology that become their weakness to financing. As we can see in the recent years, information technology have developed rapidly when household ownership of mobile phones, smartphones and tablet computers has spread quickly, but SME have been unable to sufficiently utilize such opportunities because they doesn't have their own websites to promote their product with other people. And for example, if they have their own websites, They can increase their sales. Like in Japan, there are 90% of households mobile phone ownership have been reached and 90.58% of internet users reach. This percentage can be the reason why SME in Japan selling products and receiving orders via their own websites accounted for only 10% of the total, and less than 10% have their own online shop or market for their goods on internet sites, meaning that they have a good profit. It shows that SME must improve their technology skills, which is also IT skills, to increase their profit. And it doesn't mean that just only have their own website, but also keep it up with technological advance to ensure their tools that they are using are effective and conducive to productivity.
Now, let's go to source of financing for SMEs and the financial impact of different sources of finance on SMEs. The first source of financing for SMEs is personal loan. A personal loan is a one-time payment received from a lender with a predetermined repayment schedule that normally ranges from a few months up to 5 years. Personal loan is an unsecured loan where assets are not required as collateral to obtain the loan. Borrower's credit report and income will be reviewed in order for lenders to determine personal loan eligibility. Companies' debt to income, or DTI, compares monthly gross income with monthly debt payments. The history of how you've paid off the debt in the past will also be considered by lenders. Income gain, which has been reduced by tax and other deductions, will be used to pay back the loan. This implies that even if a person could be eligible for a sizable loan, that person should be sure that they can actually afford to pay it back with their post-tax earnings. The advantages of using personal loan is the lower rate of interest. Minimum rate of interest for a longer term is obtainable if company has good credit score, as the full amount need to be paid at the end of the promotion term. Having lower interest rate means the amount to be paid is lower. Chance for the payment to be made fully is higher, which results in better credit performance for future funding. Personal loan also consolidate debt easier. By making personal loan instead of bank loan from different financial institutions, finance is simplified because company only need to make one payment to one lender instead of make 5 payments to 5 different lenders. However, there are some disadvantages of personal loan. One of the disadvantages is high fees and receiving penalties are not impossible. Other fees associated with establishing the loan, such as origination fees, prepayment fees, transaction fees, late payment fees, etc., are separate from the interest charge. Therefore, the amount need to be paid in total might be more than the expected. Next, personal loan can affect credit score negatively if unable to make payments. Credit score will be impacted if company unable to make on-time payments that will result in difficulty in obtaining loan in the future. Next is crowdfunding. Crowdfunding is when a crowd funds a project or business rather than only one or two major investors. In other words, it is a small amount of money, some sort of small donations from many people. Investors can choose to provide money voluntarily or get rewards, such as shares in the business that raise the fund. There are many types of crowdfunding, such as rewards, donation, debt, equity, and more. The advantages of using crowdfunding as source of financing is it offers low-risk venture. Investors don't need to be concerned about how the economy or stock market will affect their investment because crowdfunding isn't a part of the financial market. It is also beneficiary because it is easier for companies who choose to go with crowdfunding to gain investors. Through direct online process, investors can donate money into a project or company easily. No complicated requirement needed. So there will be more investors interested to donate money into the crowdfunding campaigns. One of the disadvantages of crowdfunding is it has low success rate. Every crowdfunding campaign has its funding target that needs to be achieved in order for the amount to be used for funding the company. Most crowdfunding campaigns fall short of their funding targets. This might be due to poorly planned or timed campaigns and a lack of good crowdfunding business plan. Next, crowdfunding requires long preparation time. It is not enough by just publish the crowdfunding campaigns and wait for investors to invest in it. Efforts and time to promote the crowdfunding is needed, such as videos, advertisement, explanations, and rewards to ensure a successful crowdfunding campaigns.
Last but not least, bank overdraft. Bank overdraft is an additional source of liquidity available to business and a helpful tool to manage short-term cash flow problems. An overdraft account will be an integral part of a company's cash management, typically including an offsetting arrangement against the other company's account. Overdraft facilities are customized to the needs and financial situation of the borrower. The specific term and condition will be set forth in a credit agreement. There is advantage and disadvantage of bank overdraft. First advantage is help in keeping good track record. If a check was made on the basis of some account to be received, and if it is a delay, the check does not bounce due to inadequacy of funds. Hence, the overdraft facility allows for better payment history. Second is timely payment. It also ensures timely payments and avoidance of late payment penalty, as payment can be made even if there is a lack of sufficient balance in the account. First disadvantage of bank overdraft is higher interest rate. Overdraft facility comes at a cost. At the time, the cost is usually higher than the other sources of borrowing. Second disadvantage is risk of seizing. Bank overdraft facility may at times be secured against the inventory or other collaterals like shares, life insurance policy, and many more. The company may run a risk of this asset being seized if it fails to meet payment.
We can conclude that SMEs contribute significantly to the economic growth. One of the most serious issues faced by SMEs today is lack of available financing from financial institutions. SMEs do not have the financial power that large companies have. Hence, they will typically require external financing, which will be more limited as they will lack access to financial instruments available to large corporations such as stock market, listing, capital increases, and so on.